In fact, we'll be speaking to a lot of the buzzing managements as well. I think Imami will be with us in the next couple of minutes because that's one stock, despite a day like today where there's a lot of sentimental weakness. Imami, look at the stock, been 12-13% higher. 15% higher now. Look at that. So let's not keep you waiting and let's straight away dive into that conversation. Fourth quarter numbers have been looking good for the company with a revenue growth of about 6.4%. Gross margin expansion is something that the market absolutely loves. 270 basis points is the kind of year-on-year increase in gross margins that Imami has managed to put up. To talk about the outlook, we have with us Mr. N.H. Bhansali, CEO of Finance, Strategy and Business Development and the CFO of the company, to take some questions. Mr. Bhansali, thank you so much for joining in. So you can see, I think, the market's thumping reaction on the screen. So let's talk about the margin expansion, actually, growth in a bit. But first on margins, what sort of led to this kind of a 270 basis points increase? Because this is despite the fact that I think you're spending more on advertising. And what's the trajectory for margins going forward in terms of costs and the other pressures that you're looking at?
Yeah, the margins have improved, gross margins have improved substantially, and it is in line with our expectation. In fact, compared to the previous years, the costs had been benign, and we believe that these costs are going to remain there. And there could be slight improvement further from here, but overall, broadly on the gross margin level, it may remain at this level for the times to come as well, because these had increased substantially in the previous period, and now it is in the last year and in the current year also, it has been reduced and is almost on a nominal level.
So are you saying that this 26% kind of a band, because you ended the year at 26.5%, are you saying that this is sustainable despite the rise in, ad spends?
Yeah, very much. If you look at our history of all these years, we had always been around this range, even in the pre-COVID levels. So these would remain. And while we keep on investing in the brands and also on the strategic investments and other companies, taking together all this, we believe that we would be nearer to this range itself.
Okay, so maintaining margins broadly is what you're expecting, right? So can you talk about the top line growth? What can we expect in FY25? Can you hit double digit considering the summer season is looking good? There is some recovery seen in the rural markets. In FY25, do you think your top line can hit double digit growth?
Yes, we hope so, and we are building our business and all our steps towards that. We expect a kind of a double-digit growth, and rural has also started picking up. In fact, this quarter has witnessed a 6% growth in the rural as well. All the channels have fired, including the general trade, which was still there. It was a very lull since few quarters, but that has also there has been a slight growth even in the general trade. And the new age channels have done very well. Both the new age channels taken together have delivered more than 25% growth. So all channels firing up, all the businesses, market shares intake. We are putting
all
right
except Kesh King. All your engines are fired except Kesh King, which has been under pressure, and you've alluded to competition over there. When do you expect a revival? Is there any guidance you can share on Kesh King?
Yeah, even in the Kesh King, no, the market share has not declined. So it has more to do with some discretionary spends. And we believe that Kesh King and the male grooming both would come back to its trajectory. And we are taking many steps there. But this being the discretionary items, so the growth comes later.
Mr. Bhansali, just on the summer products, Dermi Cool and Navratna Oil, considering we've had a blistering summer, right? Records being hit across the country. Should we expect, more than usual volume growth in Q1? How have these two products done? And also, what is the contribution of summer in your total mix right now? What's the split between winter and summer?
Yeah, so there are winter, summer, and also the around the year products. So broadly, the seasonal products contribute around 40% plus, 40-45% kind of sales comes from the seasonal products. And in terms of the growth from Dermicool also and Dermicool and the summer products, we expect a substantial growth, and we feel that the trajectory is very good, given that the summer has been very scorching and season is favorable. And also on the top of monsoon forecasts, which are also expected to be good, we expect good growth to come in.
So can you, what is good? How good is good? Some idea, actually, some guidance, overall volumes, what you're expecting overall across the portfolio this year?
Yeah, it's very difficult to say, but I can just tell you the exact number as to what has happened in the secondary sales for the quarter, for the March quarter itself for the Dermicool. We have had a secondary growth of 25%.
Oh.
Okay.
This is in the March quarter, and April's looking better, the April quarter, because that's when the summer really picked up.
April, May, the current trajectory seems to be good.
Okay.
So what's the current trajectory then on your D2C brands? Because they've done very well, scorching growth seen.
Yeah, so the D2C brands constitutes many more things. It's not only about the summer products. So there are many others, and there are digital products specifically catering to directly to the consumers from our Zandu Care platform, and it's also doing exceedingly well. And in terms
so what about Man Care and Brillare?
Yeah.
The Man company.
These are our two subsidiaries, and they have also done exceedingly well in the past financial year and in the past quarter. And they are also on the high growth trajectory.
What's the absolute sales and EBITDA from the Man company and Brillare? And what can you guide for in terms of growth for these two subsidiaries in FY25?
So they both would continue around 5% of our overall sales.
Okay. And in FY24, they grew at 59%. What's the growth that you're targeting, given the base?
We again see, because there is a strong potential for this kind of brands, and these are D2C as well as they are also targeting very high-end consumers in the modern trade, high-end modern trade, and so we expect good growth, even double-digit, higher double-digit kind of a growth from these two.
Mr. Bansali, you're sounding quite confident and fairly optimistic, and that's great to see. So give us some sense. The FMCG sector for the last sort of year or so has struggled with low single-digit volumes, right? But a lot of your companies, peer companies as well, are talking about things picking up. So for FY25 full year, volume growth, even if you don't want to put a number, but at least some idea. I mean, will it be mid-single digits? Can it go to high single digits? What's the best sense?
So I would give a sense as to we expect kind of a 2 to 3% kind of a price growth. Rest would be led by volume.
So 2 to 3% price growth, but the volume itself is what I'm trying to understand. You grew 2% volume in FY24.
Right. We are targeting double digit.
Okay, so you're targeting double-digit top-line growth with 2 to 3% price growth, and the rest will be volume-driven, correct?
Yeah.
Okay, I think that tells us a fair bit.
What about the international markets? Are we expecting a double-digit revenue growth for the international business too?
For the last year, no. There has been a lot of volatility. If you look at for the full financial year, constant currency growth had been at a 12% for the full financial year and 9% for the quarter. Despite challenges in Southeast Asia and also in the CIS, Russia, Ukraine also. We expect the same kind of a growth to come in the current fiscal as well, FY25 as well.
Okay. And just two more questions. One, is there a number that you have in mind for ad spends in FY25? They constituted about 20% of your overall revenues in Q4. What's the run rate on ad spends in FY25? And secondly, on promoter pledge, do you have plans to bring it down in this year?
So first, on the media spends would remain in the level as it was in the previous fiscal year. And the pledge percentage has been very, very low currently.
Yes.
It's around 13% or so of the promoter's equity. So for the overall, it is still half of that. And it's very much highly in control, and there are no worries about that. And we do not have plans to further borrow against the pledge of shares. So we expect it's a good, very balanced kind of management.
Mr. Bansali, final question. How much cash are you sitting on at the end of FY24? And what do you plan to do with it? What's the outlook on CapEx? Will you be looking at acquiring any more brands or maybe even companies? What's the plan for this year?
Yeah, we have a net cash of over 300 crore, around 350 crore or so, and yearly EBITDA of 900 crore, 900 to 1,000 crore around so of an EBITDA. And we are always on the lookout for acquisitions as well as the strategic investments, and we keep on looking at the right opportunities which has a synergetic benefit and as a potential to grow. So always on the lookout, and this money is,
Anything?
besides dividends would be also spent for those strategic investments and acquisitions.
And anything specific on the radar? And in which category would you be looking a little more aggressively in terms of acquisitions?
Will be very meaningful rather than be aggressive. So pricing is a function of how does it make sense for us. And we are looking at acquisitions or strategic investments wherever we are already present. So kind of personal care and healthcare, more towards D2C kind of companies, and where we feel that the potential for growth is high and with an eye on the path to profitability.
Mr. Bhansali, we leave the conversation here. Thank you very much for joining in. That's Emami targeting a double-digit revenue growth in FY25, which will be driven by 2 to 3% pricing growth, and the balance will be volume growth. International markets too to do pretty well, and margins should be stable. Get in